What is going on, guys? Welcome back to the Small Account Challenge episode 4. Today was a losing day for us. We had 3 winning days and today we lost. However, it was a really boring, slow day, not a lot of opportunity. I think pretty much all calls and puts lost money on open today. So if you swung calls, you made some money, but if you didn't, you got crushed. And if you bought calls today, more than most likely you got crushed as well because theta was just decaying. The VIX got destroyed today. They'll just keep it simple. Went down pretty big in a normal day. I mean, tech was the weakest sector of the day. Banks had phenomenal runs and we did a couple plays. We're going to talk about it and let's just hop right into that. But before I even do that, take a look here on the Instagram account. Started the account. Again, I was being a little cocky. I was saying day 4 might be the streak here. And then boom, the market started to fall. We had these positions today, 1133. Look at that. Oh man, instead of posting these pictures, I should have just taken profits out. This was obviously the high of the day. And I realized that and I was observing it. And then you had this rebound. Should have got out, but you know, it's in hindsight. At the moment, it looked really good. I mean, look at these contracts, these SPY puts that are expiring tomorrow, basically. So if you're watching this today, they expire tomorrow. The QQQ puts were pretty good, but again, I mean, 6% here and almost 60% on the SPY puts. But again, we budgeted a trade. It was a small trade. It wasn't a huge amount of risk. Again, it was pretty decent. It was $230 and it went to $365. So it was a pretty good play itself. But however, we took a loss on both of these plays. Matter of fact, everything we did today almost took a loss. Let's take a look at the alerts, what we did, and before we hop right in. So the day opened 10:15. So we waited basically 45 minutes and I wanted to grab these QQQ puts for 330 and then we did a cancel for order and we got it for 350 and then cancel the order back in for 350 and we got filled and then I added one more at 334 and we got a break even at 346 and this was basically at 1036. Take a look at the Qs over here. I mean, it's pretty interesting, right? At open, it just sold off, bounced back up. So we got in somewhere at 10:15. So it was here. We got in this bounce somewhere here, sold off. Obviously, here is where all the money was being made and then bounced back up. And then we had another sell off here. I was like, shit. We had 2 opportunities to exit and we missed it primarily because I was looking at the news and there was really no good solid reason for the market to go up. But the market does what the heck the market wants to. Again, if it wasn't for TLT holding up and not selling off, I mean, look at TLT here. It just had a pretty green day. Now, TLT is basically just a 20-year bond index. What that usually represents is that money's flowing into TLT and then banks are actually going up, which is really rare. Usually when bonds get bought back up, banks usually typically go down. So we did a JPM play as well. I'll talk about that right now, actually. So let's go back to the alert. Basically at 2:37 p.m. Let's just go to the charts here. So if you take a look at JPM here, he had a phenomenal run in the morning and went to like 101, almost 102, trying to break out. Got sold back off and then just had this consistent uptrend here. And then right about 2:30ish, we decided to get in and we lost $50 on that or something like that. So I ended up, this is the only position I'm holding for a downside move. So what I'm going to do is I'm probably going to hold on to the JPMs for probably 2 to 3 weeks, maybe till expiration, maybe not, until we get a significant move down. Again, it's all possible that it happens any moment, honestly. So we got 2 weeks and Friday on those, so those expire on the 23rd. Not in a big rush to get out of those, but did hold on to that. Anyways, moving forward, near close, I closed the weeklies on the SPY for 79 cents. So we bought these at 115, like $60 we lost on those. And then originally I was going to hold the Qs, but then I'm like, wait a minute, if I'm selling the weeklies on the SPY, that means the market is showing strength. Why am I holding these QQQs? Might as well just get rid of those. So we sold those for 314 and we had an average of 346. Basically what you see here is the result of that. We lost $209. Wasn't horrible. It was just a little bit tiny setback. I mean, it could have been a massive loss, right? Like a 50% loss. That would have totally ruined my day, but 12%, 13%, not a big deal at all. It's easy to rebound from that. Now, again, these plays could have hit, but it didn't. So that's the thing. You take a gamble, you take your losses, you move on. Let's see what brings up tomorrow. Jobless claims came out today. Again, the market did not care any of that. And tech was unusually weak today. Forward, finally, Piton had a red day, I guess. Gave back all of his gains. I mean, that was, pretty interesting. If you take a look at Piton, it actually opened up and hit 120 pre-market, kind of sold off, bounced back up, I believe almost hit 220 again, then sold off, and then just kept selling off the rest of the day, which is amazing how we couldn't get that yesterday, right? We salvaged $100 on it and we were happy, but obviously those contracts that we had would have printed today, but again, the risk was too high because they're weeklies, they expire, so we decided not to do that and we made a small profit, so we took it. But it's just sad that we knew about it. So obviously the 120 mark area, I guess the bear said no more. This is where we're going to draw the line in the sand, and the bears attacked and they shorted the shit out of this thing. So it felt not big numbers, 1.68%. And again, it is set up to rip up. So we're going to keep an eye on JPM. Again, the Qs were pretty weak today. Taking a look at the premium Discord. Take a look over here. Let me just type this in real quick. It's just a code that we put in to get one of the charts that we want to look at. Take a look here. Healthcare was the least performing today, but tech and healthcare were kind of bouncing around. The end of the day rally kind of boosted tech numbers up, but again, tech was dragging down. That's primarily the reason why I got into the QQQ puts, because again, it's like 40-60% tech. That with 100 stocks, like 40% of them is tech. So the QQQs were definitely the weakest link out of the whole group today. So if you're going to take a short position, why not attack the weakest link? So we did that, and again, it just didn't work out. I mean, energy just had a great day today, obviously. I think this is just an oversold territory, and I think because energy had a great day, utilities, real estate, banks had a good day, which is kind of weird. I mean, there was really no reason, nothing about stimulus, nothing like that really happening. So we decided to take a short play on JPM. I didn't expect an immediate reward in this play. This is why we got JPM October 23rd. Picked these up for $1.99. I got 5 of them. It dropped to like $1.95, whatever, and we lost $50 or something like that. The point of this play is that I want to have downside leverage so we can play calls on the cash account and just kind of chill out. Within the next 2 weeks, there's probably going to be a move on the downside, and when there is, we'll sell out of the JPMs, take the profits, roll over to the cash account, and just call it a day from there. Again, this can happen tomorrow. It can happen next week. I'm not really too concerned about it. I'm just gonna let it sit there for a little bit. If it doesn't happen immediately, I will wait. It's not going to be consistently green for the next 2 days, and JPM doesn't typically hold its bounce. I mean, just take a look at a 30-minute chart here. It bounces a lot. I mean, this is a consistent uptrend, but so is the whole entire market. SPY is basically the same way before the sell-offs, but if you take a look at a closer 1-hour chart, you'll notice that it chops around a lot and usually doesn't hold 100. Gets up there, right? Like, for example, right here, right? 101, 102, bounced up here, sold off dramatically, and just had this really phenomenal downtrend. Now, I'm not saying JPM is going to hit 90 again or anything like that, but we do have 99.50 puts. So if it does hit like 98-ish, or even if it breaks 100 within the next 2-3 days, we'll profit on that, and pretty decent amount, obviously. So if it breaks 100, it goes to the 99s. That means we have in the money contracts with 2 weeks out. So if that happens, that'll be great. It could definitely retrace, but the market's looking strong. You need news to come out for the market to fall right now. The market is pricing Donald Trump winning the election, obviously, if you guys haven't noticed that. And I mean, unless Joe Biden does something really quickly or some scandal pops up, or, they always got a wild card. So the market's anticipating that. But the VIX dying off today was a very bullish move. So I do believe tomorrow is probably going to be another green day. Who knows? We'll see what happens. I want to start shorting these overvalued growth stocks, and they have the most potential to pay out. But again, like Coca-Cola got a break today, 50. That's typically doesn't even hold that as well, right? Bounces around once it goes above the 50-day average. Take a look here. So yeah, I mean, again, it just bounced all under 50. So you have a lot of opportunity to make money here. It just depends on where it goes. I'm not saying it's going to go to 48 or 47, but it could. And there's opportunity to make money here. Again, the whole entire market is just very saturated. You have individual names doing really well, like Beyond Meat, Roku. I mean, the list goes on. But again, just look at here. Netflix weak, Google strong, Facebook strong, Apple weak. I mean, it's just unbalanced. And, you have a lot of stuff going on. Even Boeing got a little break today, and Boeing got clapped early on. Take a look here at Boeing. Yeah, so news came out with Boeing, and then boom, popped out. And then news came out here. Look at this. Look at these candles. Look. I mean, if you're trading Boeing and you're on the upside and you're like, fuck, I'm losing all my money. And then you see a candle like that, you must get really excited, right? But these type of candles I usually sell. Don't buy here. You want to sell typically. When you see a huge red candles here, you don't want to start chasing this. Maybe it's a time to buy the dip here. But again, I just hate playing Boeing. I don't recall ever doing a Boeing play and having a enjoyable experience trading Boeing. It just never happens that way. Maybe once in a blue moon, I'll buy calls or puts and they hit and just keep hitting. But in most cases, when you trade Boeing, it's just so painful because one is it's irrational. It does what it wants to do. It decays your contract so quickly because there's a lot of IV built in Boeing. Again, Boeing's not supposed to be a $160 stock. It's supposed to be $400 or $500 stock. So there's a lot of IV building calls, and what happens is it just doesn't do anything, and it just keeps dying. So it's really tough to chase this. It's one of the toughest stocks to trade for 2020, hands down. The next one will probably be Roku, but I'm not even going to touch on that. But anyways, guys, that's it. Really appreciate every single one of you. Hit the like button, subscribe, comment your thoughts on the market. Let's collaborate, see what's going on. And then, yeah.